Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing market cycle theory. Namely, what I'm interested to discuss in this video is whether this cycle is going to play out like a fairly typical cycle, where Bitcoin's peak comes in Q4 of the post-halving year, like you can see here, here, and here, or if it will end up being a left translated peak where the actual peak comes earlier than it normally does. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Link is in the description below. Let's go ahead and jump in. So there's been quite an interesting debate about the current market cycle for Bitcoin, whether it is playing out like prior cycles, whether it is accelerated, whether even if it is accelerated, does that mean that it'll turn into a left translated peak? The general idea with crypto, at least as we've seen for a number of years now, is that Bitcoin essentially has peaked in the fourth quarter of all post-halving years, right? So that's your 2013, 2017, 2021, and potentially 2025. And then there's another train of thought that says that you will get a left translated cycle peak, where the peak occurs a lot sooner than anyone thinks it's going to. Now, what I'm going to do in this video is present both sides. I'm not here to convince you of one or the other. I'm just here to present information supporting both views so that you can use that information to figure out what you think is the most likely outcome. And what we're going to start with is just the normal view, right? The sort of the normal cycle view, where it basically just peaks in Q4 of the post-halving year. Last cycle, I think a lot of us did mental gymnastics on could it, would it be different? And it ended up peaking basically when it always does. And so, I guess the sort of the counter argument to the left translated peak, the first one is are we just sort of doing mental gymnastics once again, thinking that it's going to be different, but in reality, it's actually the same. So let's go through the pieces of evidence to suggest that this isn't really different, at least so far. And then after that, we'll go through the evidence for a left translated peak. So the first piece of evidence that I'd like to take a look at is the ROI of Bitcoin from the 2022 low. So if you look at the ROI from the 2022 low, and let's just look at this current cycle compared to the last two cycles. Now, when you look at it like this, it doesn't really seem like we're doing anything that is that different, right? Now, it is true that Bitcoin's ROI from the low at this point in this cycle at 4.4x is well above where it was in the last two cycles at this same point. They were both at less than 3x. So it is true that we have accelerated quicker than in the prior cycles. But it was also true that last cycle accelerated beyond the cycle before it for a while, and then it ultimately cooled off and got back on track, right? It ultimately cooled off and got back on track, right? You see that pretty clearly, that Bitcoin got well ahead in the green line, the cycle that came before it, which could have made people believe back then that it was going to be a left translated peak. But what ended up happening is Bitcoin came all the way back down, went actually below where the prior cycle was, but ultimately just got right back on track, right? And by day 700, they were both up off their lows about 6x or so. Now, again, in the current cycle, we're only on day 500, right? And over here, this was day 700. So that's another 200 days from now. So a lot of people might look at this and say, well, we are accelerated beyond what we normally are. But the counterpoint to say that it's not necessarily implying that this time is different is to say, well, last cycle we were also ahead and we ended up just getting a cool-off period that then led into another rally later on in the cycle. So I think that is one piece of evidence to suggest that so far, at least, things look pretty similar. In fact, 2 cycles ago, we had a rally up to this ROI only about another month from now, right? So basically, we reached this same point, another month from now. So it's not really that different when you compare it to the 2 cycles ago. If you compare it to last cycle, we were well below where we currently are right now, and we didn't actually reach to the levels that we are right now until about day 700. So again, not until the end of this year. So when you think about that, and we think about how is this shaping up to be different, at this point, it's kind of where it normally is, right? At this point, maybe slightly accelerated, but so too was the prior cycle. So let's not get carried away. And there is this idea, of course, that would suggest that if we are sort of mimicking this rally, then we could have a cool-off phase after the halving. Now, this rally did not peak into the halving. What it did peak into was rate cuts, right? And I think that is the thing to consider, is that if you look at interest rates, and we look to see, really where they are right now compared to where they were last cycle, do you see this rally by Bitcoin right here? That occurred during the period where the Fed paused interest rates. In fact, if you were to take a bar pattern from right here until that peak, and let's actually match it up so you see that? You see that rally when the Fed paused? It was an initial sell-off and then a rally. Now take that over here when the Fed paused. And you'll see it's a very, very similar pattern, right? Very similar pattern, at least so far. That doesn't mean that it will continue to play out in the same way, but it is at least a pattern that we have seen so far. And what you'll see is that once rate cuts arrived, what you'll notice is that Bitcoin then cooled off for about 9 months or so before going back up. So there is this idea that a lot of people are talking about, where Bitcoin just sort of peaks this year, right? And given the current momentum, I don't really think you can blame them. And in fact, they may have a point, and we'll get to that a little bit later. They may actually have a legitimate point that is worth putting some mental energy into. If it plays out like last cycle, right? If it plays out like last cycle, then we would expect Bitcoin to cool off once rate cuts arrive. Now, rate cuts are, and by the way, cool off before rate cuts arrive, right? Bitcoin topped over here about a month before rate cuts arrive. Now, if you were to go over to current market expectations for rate cuts, the first rate cut is not projected to occur until June. So, and it could be May, although the market's not assigning a huge probability to a cut in May. I think the only way they cut in May is if the labor market really falls apart between now and then, right? Which, I mean, again, we'll get the unemployment rate data next week. We'll get the labor market data next week. If it comes in really, really bad, then they may shift it to May. But at this point, it looks like the first rate cut is going to be in June. And so what you might have is sort of a June cut, a September cut, and then a December cut. They're probably not going to cut in November just because of the election. I imagine they probably aren't going to want to cut November. So it could be June, September, December, or it could be May, July, December, or something like that. Which is funny because the market is still pricing in these 3 rate cuts, which is precisely the number of rate cuts we had in 2019. Okay? So, if Bitcoin were to mimic what it did in the last cycle, then what it means is that sometime after the halving, you could have a local top in April, it could already be in, right? Or you could have a local top in May. Remember, we rallied last cycle until about 1 month before rate cuts. Doesn't have to be the exact same. Could be 2 months before, could be 1 month after, right? It could be a lot of things. But that's what we saw, is that Bitcoin cooled off after rate cuts arrived for about 6 months. It then started to pick back up again, and then we had a recession, right? And then we had a recession. Now, that recession was arguably a black swan, and I don't think it should go into your calculations as to, what this cycle is going to play out like. I don't think we can just assume that a black swan is going to come in and sort of derail everything. That doesn't mean there can't be something, something else, right? It could just be a slow process to the business cycle. But that is something that I think is relevant to think about, is that at the end of the day, whatever the reason, you had a 6-month bear market once rate cuts really came, right? About a 6-month bear market. And so if you were to get a 6-month bear market after rate cuts arrive, let's say rate cuts arrive, starting before, let's say you started in either April or May, 6 months from then, if we go over to 6 months from then would be October, right? 6 months after April is October. 6 months after May is November. So then that's sort of the question is, will you get that 6-month cool-off period where Bitcoin stays well off its lows, but maybe some of the altcoins are stuck in traffic on Struggle Street because they've been broken off of their Bitcoin support levels. Now, remember, what marked the local top in 2019, right before rate cuts arrived, was all Bitcoin pairs breaking down. I've said many times, I think that we are going to see alt Bitcoin pairs roll over as we get here into the end of March and early April. And I would expect them to break down either in April or in May. And when they break down, I think it will be a local top for Bitcoin USD. Okay. It could be a higher high, it could be a double top. Theoretically, it could even be a lower high if it plays out like ETH USD did going into the merge, where ETH rallied into 1 month before the merge topped and then put a lower high the month of the merge. Higher high for its Bitcoin pair, but a lower high for its USD pair. So again, that is what I would be looking for when all Bitcoin pairs break down. All right? Would be a local top. And if it plays out like 2019, right, like this green line over there, then essentially what you get is just a 6-month cool-off period where you start to put in lower highs and lower lows, right? Just about 6 months going all the way out until Q4, okay? And if you did that, then you would find Bitcoin back down to potentially 3x off its low or something, by October or something, right? If it were to play out like it did in 2019, right? So really getting a significant cool off in the market as rate cuts arrive. There's a lot of people that ask me, why would Bitcoin slow down after rate cuts arrive? And I think it's a good question. My best answer to the question is that when you're in a rate hiking cycle and when you're late business cycle, a lot of people just pile into the blue chips, right? That's why Nvidia and Apple, and well, Apple's fallen off a little bit, but that's why Nvidia and Meta and Google, a lot of these different blue chip stocks have done a lot better than the micro caps because people know that they're very likely going to survive. You don't really know if some smaller company is going to survive. So you want to put your money somewhere, right? If you just have it sit in cash forever, you lose money to inflation, you seek that yield, so they go to the blue chips. What happens when rate cuts arrive is that there's sort of like a redistribution of capital where people start to say, oh, we now have looser monetary policy. And with looser monetary policy, it means that some of the smaller market cap stuff can start to do somewhat well against the higher market cap stuff. The issue with that is that as there's this redistribution of capital, we sort of the market then realizes the only reason the market was doing so well was because all that money was piling into the blue chips. Those had really high market caps. Once that capital leaves the blue chips in favor for some smaller market cap stuff, that's when you get a correction in the space, where you might get alt Bitcoin pairs bottoming out, but alt USD pairs are going down, right? As rate cuts arrive. If you're not familiar with what I'm talking about, look at alt Bitcoin pairs. You can see that they bottomed in September of 2019. But if you were to overlay total three was actually going down during that time, right? You can see it pretty clearly. Like total 3 was going down even after alt Bitcoin pairs bottomed. So altcoins started to hold up against Bitcoin, but because Bitcoin was going down, the altcoins went down on their USD pairs. So the evidence to suggest that it could play out like normal and not a left translated peak would be that if we get a 6 to 9 month cool off period after the local top is in, which potentially occurs when rate cuts arrive or maybe just before. If Bitcoin were to cool off for 6 to 9 months, then the implication of something like that would be that why can't it just do what it did over here, where it cools off like this, and then it picks back up the following year, right? And if you were to think about this, there's a lot of evidence to suggest that that's very, very well how it might play out. Because if it takes 9 months of the cool-off phase after whatever the local top is going to be, if it takes 9 months, then that essentially puts you at the end of the year, right? I mean, it's March right now. Let's say the top is either in, I don't know, like March, April, May, something like that. I don't know. If you go 7, 8, 9 months, that puts you at the end of the year. We know that this rally for Bitcoin from March of 2020 until April of 2021 was about a year, right? It was about a year. So if you had a rally like this after a 6 to 9 month cool off period, then if you have that 9 month cool off period, that gets you to the end of the year. And then let's say you have a year long rally, that would get you to the end of 2025. And then the market peaks when it always does, you know, and we're all over here doing mental gymnastics once again to figure out why it won't. So that is certainly some evidence, I think, to suggest that could certainly play out. And again, I'm not suggesting that it has to be some type of like black swan event or anything like that. But again, I mean, if you look at the unemployment rate, it is starting to trend up a little bit here. And I'm not suggesting that it has to, go as high as it has gone in prior cycles. But, if you think about it, like 8 to 9 months from now, it could really be, a significant amount higher, forcing the market to price that in and forcing the Fed to aggressively cut rates, right? So that is something that you can sort of see that's slowly starting to turn back up, right? I mean, for all of Bitcoin's history, it was basically just going down, except for 2020 when there was a pretty big sell-off when we actually hit a recession. It is starting to go back up, but all things considered, it is still relatively low. If in 7, 8, 9 months, if it's say at 4.5% or something, that could be a mild recession, and that could lead you to sort of a cool off period for the rest of the year, and then you get another rally into 2025. So that would be definitely some evidence to suggest that it's playing out like it normally does. And the only thing that's different right now is that the 2019 rally has been shifted over because rate cuts have been shifted over. In 2019, rate cuts arrived in July of 2019, and now we're probably not getting them until almost a year later. So does that just mean everything is shifted about 3 to 4 quarters, right? If you think about it, if you were to look at alt Bitcoin pairs, in fact, last cycle, they broke down in June of 2019. They also broke down about 41 weeks after the low was put in. 41 weeks after this low, guess what, is the week of April 8th, which is coincidentally just before the Bitcoin halving, which is when I've previously said I think alt Bitcoin pairs will break down. I think Bitcoin basically will continue to work and get these occasional rallies, and that those rallies will break all Bitcoin pairs down. And I think you're already starting to see the turn come. And so if this is shifted by 3/4 from breaking down in June to then breaking down in, say, April of the following year, then maybe, just maybe, the sort of the QE rally occurs 3/4 later, right? Because I mean, everything has been shifted 3/4. And if you think about it, the merge occurred about 3/4 after the top was in for Bitcoin. ETH Bitcoin is potentially breaking down. I mean, about 3/4 after it did last cycle, right? Last cycle it broke down in July. It looks like it's getting close to breaking down here. So that's some evidence. The other evidence is if you look at total 3 minus USDT divided by Bitcoin, when did it top? When did Bitcoin top? Did Bitcoin ever find its market cycle peak when it was in this range? No. Market cycle peaks for Bitcoin occurred when alt Bitcoin pairs were all the way down here at around 0.25. That was a market cycle peak. And then you also had a market cycle peak. I mean, we had a huge rally there, and then the actual peak occurred as it was going back up. But the point is that the peak did not occur until after alt Bitcoin pairs had gone to 0.25. We're only at 0.47 now, right? There could be a phase here where this rolls over, comes all the way back down, rallies for a while, and then sometime later on, like in 2025, it sort of goes back down and then gets a large move back up, just like it did over here. In fact, if you were to overlay alt Bitcoin pairs from the breakdown point to that peak right there, what do you notice? What do you notice about that? If you draw a parallel channel from here through here and go down, right? You can kind of see it. I mean, it's not perfect. I mean, maybe I should shift this over to a regular scale. I think that's why it looks a little off. So if you look at it on a regular scale, because we don't need to be looking at this on a log scale, because it's just it's just a fraction that goes between 0 and 1 basically. It has gone above 1 a little bit, but not for a while. If we take this from the breakdown point to the cycle peak for alt Bitcoin pairs, or roughly the cycle peak, you really get something that looks like that, right? And if you look at that, you can kind of see a pattern. You see that pattern there? Where you kind of keep putting in lower lows, but also lower highs. But when would that high come, right? When would that high come? It depends on when this breaks down, right? I mean, if it breaks down now, then that high that you can see that the alt rally could start December 2025, right, on their Bitcoin pairs, and then they sort of rally up into early 2026, which, if you think about it, is kind of what has always happened. I mean, even in 2018, we had altcoins doing really well, even in the bear market year, right? Even in January, a lot of altcoins were going parabolic. So this would still suggest that it's not really doing anything different. It's just that, remember last cycle, like the cycle peak occurred in November, but there was another peak that occurred in April. So what we're essentially doing is that was shifted by 3/4, April to November, approximately, right? Don't nitpick it, approximately. ETH Bitcoins break down potentially 3/4 later. Alt Bitcoin pairs potentially breaking down 3/4 later. Bitcoin dominance topping potentially 3/4 later, right? If you think about dominance, it occurred over here in September of 2019. So what happens if dominance this cycle tops this summer? Sometime this summer. I think it's possible. Right now, I think dominance is going to keep going up. I mean, look, it's just building up to the breakout point. I mean, you can see why alt Bitcoin pairs look like they want to break down. Some people have suggested that others Bitcoin is a counterexample to alt Bitcoin pairs because others Bitcoin, which excludes the top 10, has been doing better. But I would still push back on that idea and say, is it really though? Because if you look at others Bitcoin and you overlay it with interest rates, what you'll see is that last cycle it dropped about 67%. It then rallied 70% and then dropped another 64% as rate cuts arrived, right? So down 60 or down about 70, right? It was down 70, up 70, down 60. Now look over here. Others Bitcoin from the top, from the highs, down 68%. I mean, that's the same it was down here. And then look at this rally. Rallied about 70%. How is it different? Right? How is it different? I mean, a lot of people keep saying all these meme coins are doing well, some of these micro caps are doing well. Yeah, they did well last cycle too, during the pause. And then as rate cuts arrived, they bled again back to Bitcoin 64% to the downside. So to give you an idea of what that would look like, 64% from there would put others Bitcoin, all the way down at around 0.1. They're currently at 0.25. The thing about the Cryptoverse is that over a long enough period of time, alts bleed back to Bitcoin. So I don't even know that this is a counterexample because it's still doing what it did last cycle. Down 70%, up 70%, and then potentially down another 60%. What better way to kick this off than the Bitcoin halving, where people just trade in their alts for Bitcoin going into the Bitcoin halving, and then we find some type of local top as rate cuts arrive. I think that could happen. And if that happens, and then you take, say, a bar pattern on others Bitcoin, right? We'll do the same thing. Or let's just look at others, not others Bitcoin. Actually, this is others Bitcoin. So let's just look at it like this. Take a bar pattern on here. Look what happened with others Bitcoin. Right after that high was in, whether you want to take it from it there or right over here, it went down, and then it had a rally, and wouldn't you know, this bottom over here occurred in late 2025, which is when Bitcoin usually gets its parabolic blow off top, and then alts rally after that, right? So I keep thinking about it, and I'm thinking like, are we just doing all these mental gymnastics to explain why this time is different, when in reality there's just various components in the Cryptoverse that have shifted a little bit, right? Rate cuts are occurring a little bit later, so maybe the local top occurs a little bit later. Others Bitcoin hasn't broken down, but also rate cuts haven't arrived. So again, like, you can find a lot of examples where everything's been kind of delayed by approximately 3 quarters. Okay? And so if that's the case, and we get a 3-quarter cool-off period, then it would essentially bring you back into line with prior cycles, right? That's what essentially would happen. And we could go below the ROI from the last couple of cycles as well. Okay? And again, I mean, at one point, the 2019, this rally eventually went below the cycle before it. So I'm sort of assuming that at some point, this cycle will go below these 2 cycles, especially as we get maybe 6 months out from now. So that's certainly some evidence to suggest that it's playing out like it normally does. I mean, again, like, looking at the ROI from the low would not have anyone really questioning things, right? Just looking at it like that. It looks fairly consistent, right? It looks fairly consistent with what we would generally expect, okay? So again, it seems like there's a lot of things that have been shifted out by approximately 3 quarters. And if that's the case, then what happens if we put in a local top sometime in the first half of the year, and then we get a cool-off period, about 3 quarters, and we pick it back up in 2025? Okay, that's an example as to how it could just be a normal cycle. And we're over here just overcomplicating the same thing once again. So I do think that is a relevant way to think about the Cryptoverse right now, is that, look, it kind of depends on what happens here. And I think maybe I've forgotten some things, and if I think about some more things while I'm going through the left translated view, then I'll try to go back. But I do think there's a compelling case to be made, right, that it's playing out like last cycle. Bitcoin dominance rallies on up into rate cuts. We get lower interest rates sometime a little bit later this year. Altcoins bottom out against Bitcoin, sometime in the next like few months, just when they normally do when it corresponds to rate cuts, and then looser monetary policy comes in, and then the question is do you get a recession, that really a mild recession, say at the end of this year, to really keep things sort of muted, and then we pick back up next year as looser monetary as QE comes back in mass, right? Is that what ultimately happens? And I mean, you could imagine, from a lot of different instances, like why you could see something like that. I mean, there's obviously political motivations. If people are sort of feeling kind of down about a down market going into elections, then I don't think anyone will be surprised to see some form of reprieve being offered. But that's one way to think about it, right? Now, there's another way to think about it too, and that's actually, instead of taking the November top, what if you take the April top and you measure? You sort of think about it like that, okay? If you take the April top, right, and we go over to ROI from peak, right? So I want to look at the ROI from the peak, ROI after cycle peak. Now look at this. These are the last 3 cycles, and we're going to take it all the way out to the peak. Look at how far ahead of the last 2 cycles we are right now. Look how far ahead that is. At this point in the last 2 cycles, Bitcoin was still about 60% down from its all-time high. At this point in the cycle, we've never hit new all-time highs before the halving. So to some degree, this time is different, right? It's never happened before. 60% down from the high is at 27K, right? I mean, that's at 27K. That's where we normally are at this point in the cycle when measured from the peak. So the evidence to suggest that it could play out like normal and we get a peak sometime over here in Q4 2025 is if that 3-quarter lull comes into play in, say, sometime starting in Q2, Q3, and Q4. Because if that happens and you see Bitcoin fade back down, then maybe it gets another push in 2025. And if you think about it, like one of the patterns with Bitcoin is with respect to its 100-week moving average, what it often does is it will let me see here. This is not what I'm looking for. So are we? Oh, it's on a different scale. So if you look at Bitcoin in 2019, right, after that local top was in, it actually fell back down to the 100-week moving average, right? And the cycle before that, it actually fell back down to the 100-week moving average. And by the way, if you measure it from here, that was about 110% rally before it fell back down. Here, it's been about 160% rally, so it's been more impressive. The 100-week SMA right now is at less than 30K, but it is starting to move up. So I think the question is if there is some type of lull in the market going into Q2, Q3, do we end up coming back in here to sort of test these levels just like we did previously? Because if you look at sort of this cycle low right there, that's kind of where it came back to retest. And I wonder if that's the same thing as that, right? If this low right there is kind of the same thing as that one or that one, and that's where it ultimately comes back down to, is the 100-week moving average. So if that happens after rate cuts arrive, then you could make the case that it's playing out the same way it always does, and then maybe you also you get a recession, right? And then after the recession, then you get something like that. That would be if it's a mild recession, right? If it's a mild recession, you could certainly see something like that play out. But a counterpoint to that, and to say, well, maybe it is left translated, is to measure the peak to peak price action, not from November, but from April. If you measure it from April and compare it to the last cycle, it's kind of doing exactly what it did back then right now, right? Now, last cycle, we know that it did ultimately get another rally later on in the year where it took out the high, but it was only marginally higher. Okay? So again, looking at it right now, it's kind of doing what it did back then. And so you can't blame people for wondering if it's a translated cycle or not. If you were to look at the risk metric for Bitcoin, we did not go to the 0.7 to 0.8 risk band in 2019. This rally is more heated, right? It is more heated. It's up off more. It's more off the lows than it was back in 2019. And normally, when you go into the higher risk bands, you do get some type of larger pullback just a few months later. In fact, historically, every time we've gone to the 0.7 to 0.8 risk band, which is where we are right now, within about a few months, we found ourselves back at the 0.3 to 0.4 risk band. And I mean, it occurred in 2011, it occurred in 2013, and late 2013, again in 2017, and in 2021. Now, we sometimes still went up for a while before going back down to the 0.3 to 0.4 risk band, but you can see that time and time again, Bitcoin pulled back to the 0.3 to 0.4 risk band after going to the 0.7 to 0.8 risk band within a few months. Now, the 0.3 to 0.4 risk band for Bitcoin right now ranges from approximately 23K up to 32K. So again, that would get you roughly to that 100-week moving average, which is exactly where we went last cycle after rate cuts came in. And we actually fell below it because we had a recession. Again, a black swan induced recession, but a recession nonetheless. Okay? So when you think about that, right? I mean, when you think about that, I mean, if it does get that pullback into sort of the second half of the year, then it would potentially open the door for something later on, right? And a normal peak that occurs just when they always occur, and everyone's overcomplicating it once again. If you look at prior rallies in prior years, April has been an important time. In fact, last year, Bitcoin had a rally into April, and then it basically, that was the top for a while. We did sweep the high in June, and then in Q4, we took it out in Q4. That seems to be a common pattern. Have you noticed? This is evidence to suggest that a left translated peak is more likely. That's the fact that you have a top in April, and then you take that top out in Q4. Look at 2021. You have a top in April, and then you take that top out in Q4. Look at 2013. You have a top in April, and then you take that top out in Q4. Every single time that you had a top in April, and then you took that top out in Q4, in these major phases where the Bitcoin risk was 0.7 or higher, the next year was a bear market, right? I mean, not this one, but the next year was a bear market, right? So top in April, take it out in Q4. Top in April, take it out in Q4. 2013 and 2021, bear market the following year. Now, this past year, we had a top in April, and we took it out in Q4. So, but it's still rallying right now into the halving. So what happens if you do get, this kind of goes back to the normal stuff, if you do get a bear market, like a 6 to 9 month bear market, kind of like that, it doesn't have to be sort of a full year bear market like these, but if you do get something like that, then it could still lead you into a normal cycle peak. But if, on the other hand, this ends up being a top in April, and then it takes it out in November or October or December, then I gotta say, I mean, it would seem very likely that it's a left translated peak if it just keeps on going up and doesn't get any type of larger pullback. For instance, I've been fairly adamant that when all Bitcoin pairs break down and rate cuts arrive, Bitcoin should cool off for a while. If it doesn't cool off for a while, or maybe it cools off a little bit, but not a lot, let's just say maybe it falls back into 60K or something. If it does something like that, then I think that it might just be a left translated peak where, everyone front ran everything. And then by the end of 2024, everyone is going to buy for the post-halving year rally has already bought, and there's just no one left to buy, right? So again, I think that in that way, we have to, I think it makes sense to be somewhat open-minded. It really depends on what happens in Q4 of this year. Because no matter what, right, even in 2013, when there was a top in April, look at that. When did it top? The week of April 8th. You know why that's interesting, right? Is because all Bitcoin pairs 41 weeks after the low, if they break down, that is the week of April 8th. So I would really look to that, and again, even over here, Bitcoin topped out the week of April 12th. We've seen Bitcoin rally like crazy for a long time, and we're starting to see all Bitcoin pairs roll over. So there's a good chance, whether it's a left translated peak or if it's a normal cycle peak, that you get some form of a top in April. Just like 2013, just like 2021. And even last year, while we did barely take it out in June, it was still loosely a local top until Q4. So regardless of whether it's a translated peak or not, there's certainly a good chance that you get a top in April, which is when I think all Bitcoin pairs break down. So I would look towards that. I would really look towards that by Bitcoin here, as it still has some liquidity that it can take from the altcoin market. I think ETH Bitcoin needs to break down. I think alt Bitcoin pairs need to break down. And I think others Bitcoin is going to break back to the downside as we get closer to rate cuts. So if you think about it like that, if let's suppose we get a rally and then it comes back down into May and the summer, and then we hang around here for a while, and then once October gets here, it rallies back up, then you might be looking at a left translated top. Certainly, you could be. If, on the other hand, in Q4, it doesn't rally back up and put in a new top, and instead we go into a recession or something like by the end of the year, then instead of going into a top, you go into a low. And then that might set up a year-long rally back up to the upside, just like it did last cycle, except this rally was from basically March until March. The next one maybe could be like, December to December if it plays out like it normally does. So again, I think there's evidence to suggest both. If you look at it from like yield curve stuff, right? And this is probably some of the bigger evidence to suggest a left translated peak is when you look at Treasury yield spreads and you look at when we had inverted yield curves in the past, and you looked at periods of high inflation and what eventually led to a recession. Inverted yield curve has been a good predictor of it. I think a lot of people give up on it because they've been waiting forever. But we never said. I mean, it was never an inverted yield curve is a recession signal. It was the uninversion of it, and that hasn't happened yet. So I don't really know why we're getting ahead of ourselves here. It's normally after the uninversion of it that it becomes an issue, which still hasn't happened yet. But if you look at these prior cycles, what do you notice? In 1966, we had a bear market, and then we rallied on up, and then the stock market collapsed into a recession, and it topped in December of 1968. So that would be December of the election year. In 1948, coming out of World War II, we had a lot of money printing, all that stuff, and the market was struggling. And what ended up happening was that you had this bear market where this local top occurred in June of the election year, right? Then you also have the dot-com bubble, which occurred, of course, we had this inverted yield curve as well, and it topped out in March, in fact, in March. And what's interesting about that is that when it topped out in March, it had a really big pullback into April. Or sorry, no, yeah, in April. It had a really big pullback in April. And then it rallied back up into Q3, making probably a lot of people think it was going to take out the highs in Q4. And it ended up just being a lower high. And then the recession hit. So you have one example where the market topped in March of the election year. You have another example where it topped in December of the election year. And you have another example where it topped in June of the election year during these, periods of high inflation or inverted yield curves, right? So if that were to happen, then it could certainly be that you have a left translated peak. But there's also different types of left translated peaks, I imagine, right? You could have one that tops out in December of 2024, kind of like what happened in 1968. Or you could have something that, like .com, where it tops out earlier, well before anyone thinks it's going to. And then we get a pullback into the summer, and then we rally back on up into Q3. Everyone thinks it's going to be, a new high, and then it ends up not being a new high. So that could happen as well. And that's kind of what happened with Bitcoin in 2019, in fact. If you think about it, what happened in 2019 is that Bitcoin had a rally, and then it just sort of bled back down. It started to go back up in Q3 in August, right? In fact, in August of that year, it started to go back up, and it put in a lower high. Is that then, again, it's not the same. The whole thing's not the same. But if you think about like the process, right, of what happened during rate cuts back over here during this cycle, right, you had a high in sort of Q1, Q2, and then you had a lower high in Q3. And then we had a bear market. The same thing with Bitcoin in 2019, right? You had a high in the first half of the year, and then you had a lower high in Q3, and we continued the bear market. So there's no guarantee that even if you do rally in Q3, there's no guarantee that it leads to a new high, because in 2019, it looked like we were heading to a new high, and it ended up being a lower high. And in the S&P in 2000, it looked like we were heading to a higher high, and it ended up being a lower high. So there's no guarantee in the market that it's going to do anything that you think it's going to do. There's a lot of different paths that it could theoretically take. I think it's worthwhile to be open-minded to various outcomes. But you know what I would say is that no matter what, whether it was 2019 Bitcoin or whether it was 2000 S&P, the things that were still holding up in Q3 were the blue chips, right? This was the Cisco of the day and the other blue chips of the day. Those were the things that were holding the market up back then. Just like in 2019, the thing that was holding the market up in August and September was Bitcoin. Bitcoin was still near its highs, even in Q3. But the altcoin market by Q3 was already a lot lower, right? The altcoin market had dropped from 88 billion to 60 billion, and Bitcoin was still near the highs, in fact, putting in the highest weekly closes, basically. But alts were bleeding a lot. So that's why I say one potential strategy, as I've been saying this for 2 years, is just Bitcoin heavy, because it's going to hold up better than everything else at the end of the day. Well, not everything. Again, if you need to post some micro caps that are outpouring Bitcoin in the comments, by all means. But that's what essentially happened. And the reason that happened is because when the market turned here, people just fled lower risk stuff they fled higher risk stuff for lower risk stuff. That's why Bitcoin held up a lot better than the altcoin market when rate cuts arrived. So that's why I've said before, right? Bitcoin gives you some exposure to the upside in case in case the moon mission continues, right? And we do get a rally into April or something. But it also minimizes your downside risk, because even if the local top comes in April, it could still flirt with those highs for a while, whereas altcoins might be well off their highs by the time Bitcoin theoretically gets back to the 100-week moving average. So that is the point of, how is it going to play out? And, I think that honestly, I think there's evidence to support both views. I wish I could give you an answer as to the way I think it's going to play out. Honestly, I'm very conflicted on the matter. I think there's some evidence, especially with sort of the yield curve stuff, to suggest that, we could have a pretty nasty recession sometime out, could be a lot later. And that could lead to an early cycle top. But there's another view that says, what if we're just shifting everything by 3/4 and we end up getting another rally later on? I think a lot of it depends on what happens in Q4. I think if it puts in a local top this April, and then, or even now, or if it's in March, right? But if it puts in a local top around now and then puts in higher highs in April, then that might be all you get, and you could have a left translated peak. If, on the other hand, we get a 9-month bear market following an April top, then why can't you just see it play out like it normally does? And I think that is another way to think about this as well. Why couldn't it just play out like it has historically done? So, and again, for the sort of the recession sort of views, remember, there is some recency bias. Not all recessions look this bad, right? Not all of them look this bad. There are some recessions in history where they're not nearly as bad. Even in a period of 1981, when you had a very hawkish Fed, you did have, right? You did have some bear markets, right? But they weren't like the same type of bear market that you might be, comparing it to. Like, this was about a 28% drop, right? It wasn't a 38% drop or a 50% drop. This was a recession in early 1980s. And it lasted from really January of 81 until July of 82. And then after it just exploded to new highs. And you can see what ended up happening. So, if the market were to do something like that, right? That's not the same type of thing as this, right? So I don't really think that it's clear that it has to play out like any specific prior business cycle. There's all sorts of different business cycles that we can compare to. I would just simply say there's evidence to support both views. I don't know which one's going to play out. And it could be neither. Maybe it's something different, right? Maybe it's something different. I don't know which one's going to play out. And I say that because I can look at the data as much as I want, and I can find competing views. Another view to sort of point towards the idea of a 2019 style local top coming up soon is the social risk is still, despite the fact that we're at new highs, it's still relatively low. Now, if it plays out like 2019, then you wouldn't expect it to go much higher than where it is right now. Because even when the final rally came, the social risk put in a lower high. That was when alt Bitcoin pairs broke down, and that's probably why it put in a lower high, is because altcoins broke down in their Bitcoin support levels, and then once they did, alt USD pairs went down a lot, and then I think people just lost interest really quickly. So if it plays out like 2019, then maybe you get a normal cycle. But what if it plays out like this, right? Where you sort of get a move up, and it comes back down, and then it explodes to the upside as everyone just comes back. I think it makes sense to be open-minded. I do think there is a good amount of evidence to suggest that we will have a local top sometime around April, plus or minus 1 month or so, okay? And then from that level, my guess is we're going to spend a lot of the summer debating what comes in Q4, whether it's a higher high, a lower high, whether we go into a recession, and then maybe get another rally in 2025. That'll probably be up for debate by that point. And I've put out some bold predictions before, and some of them come true and some of them don't, right? And that's why I really struggle to want to be bold about it. Just for the record, there's been, I don't know how many predictions I put out over the last couple years. Some of them played out, some of them didn't. And, one of the ones that did not was so back over here, I thought Bitcoin was going to go to 23K, and I was wrong, right? I was thinking it was going to go to 23K because I thought it was sort of playing out like this, where it swept the low, That's what I thought. But in hindsight, considering that monetary policy was at a different spot over here than it was right here, maybe instead of comparing that to this, we should be comparing this to whatever develops right here as rate cuts actually arrive, right? So, I mean, I'm trying to learn as I go. This is my first business cycle. I'm trying to do the best that I can. I get a lot of things wrong. Some of the things, that I got right, dominance has been going up. So while I haven't, while the exact price path of Bitcoin is impossible to predict, I've just been Bitcoin heavy for a long time. I converted my ETH to alts, not my ETH to alts, my ETH to Bitcoin. I converted my alts to Bitcoin, and I bought Bitcoin with US dollars back in late 2022. So I've only taken a little bit of profits, right? I only a little bit, not a lot, because I just kind of recognize that at the end of the day, I'm a student to the market, and I don't know. I certainly don't know how high it can go. I think it goes on until alt Bitcoin pairs break down, and we talked about sort of this wave structure of like getting 3 waves, right? 1, 2, 3. 2019 was 1, 2, 3. This one was 1, 2, and then the third one was a failed final wave. And then here, 1, 2, and we're potentially in the third wave right now. Is it a failed third wave like this one, or is it a full third wave like 2019 and 2021, where alt Bitcoin pairs finally break down? I think that I don't know, is what I think. But I would say what I think gives you insight into what it ends up being, whether it's a failed final wave. And a failed final wave would mean it like tops at 75K or something. Like it sweeps the high, but it doesn't actually go much higher. I think the answer to that question is just where are alt Bitcoin pairs whenever that happens, right? Are they above 0.4, or if they are below 0.4? If they're below 0.4, then that's probably it. If they're still above 0.4, then the party might continue. So that's my view on that. So again, a lot of evidence sort of support both views. I do think that April is going to be a very interesting month for the Cryptoverse. I expect a ton of volatility in April, especially as alt Bitcoin pairs are starting to roll over, especially as Bitcoin dominance is potentially starting to break out. And remember, last cycle, that local top occurred when we took out sort of that range high that had been set during the rate pause period. So the Fed paused rates, Bitcoin dominance set a range. When it broke out of that range, that marked the local top for Bitcoin USD. We are getting pretty close. The range here that we're looking at is 55.3%. So above 55.3, that could be the warning sign. That could be the risk off signal for the summer. And that's what I would be looking at going into the summer months. Whether it ends up being a left translated peak, let me summarize everything, right? Whether it is a normal cycle peak or a left translated peak will probably depend on what happens in Q4 of this year. That's my view. If Bitcoin in Q4 is crashing in a recession like environment, as the unemployment rate is just sort of going higher, really we are in the window of when that could start to occur. If that happens and we get some type of like mild recession and then the Fed just starts printing again, then why not have another rally in 2025? And in fact, if you were to look at inflation year over year, we had several peaks in the 1970s, right? I mean, we had one peak and then it bottomed out at around 3%, which is kind of where we are right now. And then we had another peak. I mean, markets rallied, into that. But then as inflation really started to pick up, the market sold off again. So that is something I think that you kind of have to keep in mind, is that you could have a scenario where, inflation just doesn't go to 2%. And then maybe there's some political reasons, whatever, the Fed starts to print, it pulls us out of a mild recession. And then you sort of get a peak whenever we normally do, and then maybe inflation starts to go back up in 2025, and then we all recognize, all right, we need a real recession. in 2026 or something. So that would be a way that it could play out like normal, a way that it could play out like a left translated peak if it were to mimic 2013 or 2021, where we put in new highs in Q4, right? If we were to put in new highs in Q4, like 2013 to April here to November, or 2021 April to November, when that occurs, you normally get a bear market after that. Counterpoint is we already got that last year, you know? So maybe we just get sort of an intermediate bear market, kind of like that. And if that happens, then you have, I think you have a normal cycle. If you get a much higher high in Q4, then it probably is a left translated peak. So lots to consider. I think that it makes sense to be open-minded to either view. I'm not going to sort of favor one view over the other right now. I think there's evidence to support both, and I think we probably need more evidence to sort of make the claim one way or another. And what I'll be looking for is in Q2, Q3, if we do get a local top in April, do we do something like this, where we sort of slowly go lower highs and lower lows? That would imply potentially that a recession is coming, where the Fed will start to print again. Or do we start to go back up and put in slightly higher lows and higher highs from wherever we sort of break back down to? And I think that is kind of what's going to change my view, or make me hone in on one view over another, right? You know, if we're putting in higher highs in Q4, then there's a good, you know, compared to April, there's a good chance that it's a left translated peak. If on the other hand, we're just shifting the whole cycle over by 3 quarters, you conveniently still get a top in Q4 of the post-halving year, which is when we always do. And instead of maybe getting a first peak like that, you don't get that, and you just get some type of peak in this during the same time that we always do. In fact, you might get an example where, almost like last cycle, right? I mean, what if that were to happen, where you sort of get this sort of move down, and then you sort of get a rally in Q4, it ends up being a lower high, and then we get a recession or a recession scare, if you will. We used to have another word for it, but and everyone thinks it's going to be a massive recession, and then the Fed gets scared, they print like crazy, and then we just get what we normally get, you know. So you could have something like that happen, where everyone thinks the recession's about to start, and it still hasn't started. So anyways, I think we'll wrap it up there. I just wanted to provide these views. Someone had asked on Telegram if I could present the evidence for both cases, because I said I think there are evidence for both cases. And that's my view. I mean, that's the evidence for the regular cycle peak, and the evidence for a left translated peak. If Bitcoin cools off and gets back down to where it normally is at this point in the cycle, especially as measured from the peak, then why can't it play out like normal? You know? Like if it whatever it does here, if it fades back down here, why can't it do what it normally does? But if we just keep on climbing that wall like that, then maybe it's a left translated peak. So we'll keep an eye on that, and I will provide as many updates as I can on that over the coming weeks and months. My strategy, as I've sort of communicated many times, has just been to be Bitcoin heavy. I do think that as rate cuts arrive, and as April gets here, you could have sort of a change in the dynamics of the market, which is not too far away. So I would encourage you to sort of keep that in mind. But anyways, we'll go ahead and wrap it up there. Thank you guys for tuning in. Make sure you give the video a thumbs up, subscribe to the channel. We also do have Into the Cryptoverse Premium at intothecryptoverse.com. And I'll see you guys next time. Bye.